Welcome, everyone. It's Angelo Robles to the Angelo Robles podcast. I'm also the founder and CEO at Family Office Association. Today, we have the extraordinary Adam Robinson on investing, government, inflation, interest rates, the truth on money printing, gold, and really that doesn't cover it like everything else. This will be a very long form interview, probably until my voice gives out. Obviously, it features Adam Robinson, founder of Robinson Global Strategies. He's been a wonderful guest over many years. It's a pleasure to have him back. Adam, welcome back to the show.
Always a pleasure, Angelo. Truly, always a pleasure.
Thank you. Let's get right to it. What's the best investment advice that you ever received?
Oh my. I really have to think about that. Well, I've stated this before. It wasn't investment advice. It was entrepreneurial advice to go into ball bearings. It was after I had sold my company, the Princeton Review, and was wondering what to do next. And someone I respected, an older, wiser, very hugely successful businessman said, "Adam, you should go into ball bearings." And I said, "What? Ball bearings?" This is some time ago. And he said that ball bearings have not had their Thomas Edison yet, right? Wall Street is all these ferocious sharks there, and you're smart, but there are other smart people, and ball bearings, go into ball bearings. And so that was entrepreneurial advice for me, but I think it's good venture capital advice as well for anyone.
Yes, that would be. Why are investors not better off in a low-cost index fund or ETF such as the SPY, instead of paying fees to trust an active investment fund over decades, where the fees often erode the wealth and the probability, the math proves it out, is they're not even going to beat the S&P 500. You're less transparent. You're often, if it's an alternative, less liquid. You're higher in fees. And more importantly, your net returns are probably not going to be as good.
Wait, I'm not sure I'm agreeing with your statement.
You don't have to.
I didn't get the question there.
The question is
why that's the case?
Most active managers don't appear to be beating a index like the S&P.
No, the number of people who truly outperform the broad market indexes over decades, right? Anyone can succeed for 5-10 years. Mm-hmm. If you're bullish and the market is going up, you're going to look like a genius. The question is, are you truly an all-weather investor? And the number of fund managers who have outperformed the S&P over time, fewer than a dozen, right?
Yes.
Really, fewer than a dozen, and they're worth their weight in gold. But everyone else, you may as well put your money in an index fund.
So then, what makes those? Let's use it 12 to 12. Did they have an edge at one time? Is that edge still continuing? Did they take concentrated risk and luck played out on their sides? What makes them who they are?
Well, it is precisely my point that I was removing the luck element, right? I was granting that there are numerous fund managers who over any 5 or 10 year stretch can outperform. Say they've got a bias in tech and to go long tech, and the market happens to be ripping on tech and they look like geniuses. And the question is, are they able to adapt when tech starts selling down? I'm not offering investment advice. I'm not saying tech is selling down. But I think that's the real test, not a matter of luck and not a matter of an idiosyncratic investment style that happens to work for 5 or 10 years. I think the real test is over 20 plus years. You have to have seen at least one cycle up and down.
And in terms of probability in making decisions on investing, I mean, I would assume the smartest people are constantly revising their understanding, reconsidering a problem they thought they already solved. They're open to new points of view, new information, new ideas, contradictions, challenges to their way of thinking. Most investors are too busy catching falling knives. What about them makes them so special?
Well, a number of things. One is they have a process, right? They have a systematic process for approaching investment decisions, and they're evidence-based. You know, one of the challenges in becoming successful is you become enamored of whatever it is that led to your success. And you have markets, you have regime changes. You know, there were a lot of people that made a ton of money in the Big Short, right? Betting that real estate would go down. And those same superstars did very poorly after the market rebounded, right? After March 2009, right? And I think March 9th, 2009 was the bottom. And then those same investors kept looking for another real estate collapse and for gold to go to infinity. And so one of the challenges is not becoming wedded to your success and being adaptable. I think that's really important, and evidence-based, right? Seeing what's in front of you.
Is curiosity more important than knowledge? Meaning knowledge could be acquired. You could have enough money to buy it. You could get some of it, a lot of it for free on Google. But curiosity, you actually have to have desire, passion, and work for.
Well, I've never understood why curiosity is considered a virtue. In fact, to succeed at anything, I'm reminded of Charlie Munger's, one of my favorite quotes: take a simple idea and take it seriously. So if you're going to be curious, you have to be organic about your curiosity. So for example, I am always curious about anomalies, right? I look for anomalies in markets, and I know that anomalies are dismissed by people, and I know that they're huge opportunities, right? An anomaly is a sign that your worldview, your model of the world is inconsistent, is incompatible with what you're actually seeing. And most people just go, that doesn't make any sense. But anomalies are opportunities to revise your model and to spot opportunities. So for example, I know that Sam Zell is really curious, again, also like me, things that don't make sense. He's also really curious about legislative changes. So he knows that if there's a legislative change somewhere, a significant one, and not opposite side parking, something like that, but a significant legislative change, he knows that that's going to have investment repercussions. So he's curious about those two things. And I'm sure Buffett and Munger, very focused in their curiosity. It's not a pan curiosity. It's not like they're curious about everything. You couldn't afford to be. There's just not enough time if you want to excel.
If a wealthy family, this is a magic ball question, but were to give you $1 billion tomorrow and say, Adam, long-term aggressive, how would you invest it in terms of allocation?
Oh, well, I got to think that one through. Did you say aggressive?
Yeah, let's go with aggressive.
Well, you know, generally I'm long short. So for example, if you ask me tomorrow or 6 months from now, is the stock market going to be higher or lower? I would say, I'm not sure. But if you said, are US equities going to be higher than global equities? I am very sure about that, right? For the last, since 2007, for 14 years, US equities have outperformed global equities. So despite going up and down, everything, and in fact, US equities outperform more when they're going down, because when they're going down, the world is collapsing. And so I would go long, short. I would look for long, short plays, like long the US, short global equities. You can get refined about that, but that would be one play. There are various tech disruptions. You get a basket of tech losers like IBM, a lot of the old dinosaur tech companies, put them in a short basket and go long a basket of outperforming tech stocks. Same concept, right? It sounds like it's a hedged bet, but in fact, it's a bet that you can place with more confidence. It's got a higher Sharpe ratio, generally long short, and means you can lever the trade. So that's a little more aggressive. So I look for long short plays. I'll tell you what I wouldn't look for is things like, this is going to get me in trouble, but crypto.
Oh, right? We're going to get to that, Adam, but you can talk about it. Go for it.
Okay. Well, I'm just going to say that it's largely gambling. Crypto coins are largely gambling. Now, you can make a bet on blockchain technologies. They're really smart contracts, blockchain technologies. They're extraordinary developments in NFTs, in the multiverse world. I don't know if you knew this, Angelo. I was surprised to learn, but there are some online games, mind you, with over 1 billion active daily players. Right? You got to think about that. 1 billion active. I don't know anybody that plays them. So,
I have a teenager, so I know a little bit.
But they have entire economies within those games.
Oh, absolutely.
It's fascinating. And I had dismissed those games as escapism, as one form of escapism. But in fact, the young people that play them are actively engaged socially in developing teams and interacting with other game players. So these are really fascinating times. I think the next 5 to 10 years are going to be the most disruptive possibly ever. I think we're on the cusp of some really amazing technologies. So I devote some to blockchain and these emerging technologies, not the coins. But yeah, so that's there. And you know what? I devote some to consumer venture capital, consumer products. Because I know the exit for, if you're successful with a consumer product company, the exit is you're acquired by one of the giant, whether it's a giant food company or a giant, and so the exits are pretty spectacular. Giant fashion company, clothing, but I devote some to venture capital in that billion.
I mean, I'm assuming, and I see some of the questions even coming in from my text, most people have been very kind of anti the dollar, the US, and pro relatively international stocks. You took a different perspective. I do have a series of questions relative coming up about that. So we'll put that on a bit of a hiatus for about 15, 20 minutes, but I did take note of it.
By the way, it's not a perspective I have, it's a fact, right? I mean, if you just take a look at the long,
but is that the past? What has changed?
Long the US, short the rest of the world, that trade is at all-time highs as I speak.
Okay. It's not really meant to be a crypto question. Those are coming, but okay. it's going to incorporate elements of it in. Here we go.
Go for it.
Charlie and Warren did like something like Bitcoin and not insurance back in 1959. I know they didn't become partners for 20 years later, but they met in 1959. How would they go about accumulating it? Now, really the real questions. What questions would they be asking? And what would their mental model be to buy?
You mean to buy Bitcoin or to buy anything? I can deconstruct their model. So, Angelo, I don't know if we talked about this in our other podcasts, but people view Charlie and Warren as investors who happen to philosophize. In fact, they're philosophers who happen to invest. That's really what they are. And so Warren and Charlie, not 1959, but a little later than that, when they teamed up, set themselves the following questions. Given that the world is complex and I can't know everything, I being, say, Warren, I can't know everything. Given that whatever I know is uncertain and possibly incorrect, given, especially about the future, given that I don't know what you know, and given that my reasoning is subject to error, how would I invest given those axioms, right? And the way they invest is the conclusion to that problem. Again, given the world is uncertain, it's unknowable, it's complex, I don't know what you know, I don't know that what I know may or may not be correct, and my reasoning may or may not be faulty. How does one invest in such a world? What can you be sure will go up in value over time? And there's really only one thing that you can be absolutely sure will go up over time, and that's human ingenuity, right? The value of human enterprise has to go up, right? I mean, I suppose you could cite a few centuries in the Middle Ages, the Dark Ages, where human knowledge declined. But in general, human knowledge and human ingenuity increases. So the value of business enterprises over time increases, which is why Buffett, you can't say that about real estate. You can't say that about art. You can't say it about wine. You can't say it about farmland. You can't say it about anything over time. And so that's what they do. They invest in enterprises and of course they have other, does the enterprise have a moat? Do we like the management team? Can we get it at a decent price? Those kinds of considerations. But that's actually, so the way they invest as philosophers.
In terms of the perception of value investing, and I look at even some of Warren's current holdings, 40% of public is in Apple, that probably wouldn't have been considered a traditional value investment. I'm going to assume many value investors get stuck in the mud, but I look at a Howard Marks, I look at a Joel Greenblatt, I look at a Bill Miller, obviously Warren Buffett. They stick within a foundation of what they consider value, and sometimes that puck may move a little bit, but they're adaptable to the situation and how the world is changing. Would you agree?
Well, yes. The thing about being a value investor, and I've critiqued, there's a difference between buying a great company at a good price, right? Getting good value for your money versus a value stock. And, right. So and Buffett and Munger acquire companies. That's really what they're doing, acquiring businesses. They're acquiring great businesses, proven businesses with proven management and moats and some other desiderata that they can get at a decent price. It's hard to get a great company at a great price. Very rare because everybody wants it, right? The prices get bid up. But generally, if you wait for great company at a good price and hold on, you'll be okay. Now, the problem as investors is while Buffett and Howard Marks and the other value investors can sit out a 5 or 10 year downturn, it's a lot harder for their investors.
True.
So it's something that you have to steel yourself about. Is these if you're a value investor, you got to play it for the long haul, and that can be difficult.
I mean, isn't any investment, unless I'm a trader where I get in and out, that I want to buy and hold long term, what it's always going to be a value investment. Do I need to find something that is downtrodden? Just because something's downtrodden doesn't mean it's going to bounce back. I get a little antsy about the verbiage value investor. I just want to own really good companies.
Exactly. So you're quite right. When I talked about the axioms of Munger and Buffett, another axiom we can throw in there is that people make buy and sell decisions often emotionally, right? So during panics, you get a company that gets sold down, and you can, everything gets sold down, good companies as well as bad. And you can, during such downturns, you can acquire great companies at good prices. Again, it's hard to find a great company at a great price. Right?
Yes.
And remember, it's competitive. I think a lot of investors forget that, right? It's not just you that's investing. It's I was going to say millions of other investors around the world, highly incentivized, and usually, not usually, but many with significant more assets and research capabilities than any individual investor has, who are competing for the same assets. It's a tough game, which is why at the end of the day, most people, except for those 10 or 20 ever, who outperform the market, are better off just sticking their money in an index fund. Most people.
One of Angelo's crazy questions: who wins, crazy or smart? In a street fight, that's probably obvious, but how about in investing? Does crazy sometimes win?
Wait, it's not obvious to me. I'm not sure I understand the question.
Well, it's an open-ended question.
Who does
Answer
win?
it as you want.
Well, again, crazy can succeed for the short term, right? If you and I were in a hot rod race down residential streets in Manhattan, and you were crazy and I was not, you might beat me to the finish line because you're running risks I'm not willing to take. And as long as you don't get into a crash, crazy can succeed. The big question is probability of ruin. Remember Buffett's first rule. Rule number 1, never lose money. Rule number 2, never forget rule number 1. And so crazy, you can take, I'm assuming that what you mean by crazy is risky. And
let's go with that.
Okay, so risky again can succeed in the short term. Yeah.
Now I'm going to go back to, back to Buffett and Munger. They absolutely have had investments that have not worked out. So singular investments have not worked, I don't know, maybe 30 to 40% of the time, even for them. Are you saying as a collective, it's been successful, but even they're going to fail individually here and there?
Well, no, it's a process, right? It's a process. It's always a bet. Nothing is ever a sure thing. It's always a bet. For example, if the best team in the National Baseball League against the worst team, odds are team number 1 is going to beat the worst team. That's the odds. And that's the way to bet, right? Assuming you didn't get any odds or anything.
Ignore the point spread, yes.
Ignore the point spreads. But so on any given game, the losing team, the last place team could beat the first place team. It happens, right? You take a look at the end of the baseball season, the number 1 team has, I don't know, what, 650, right? 65% of the games, something like that.
Probably they're 162, something like that.
Well, for those who don't know how many, I'm just talking about the percentage. They win 2 out of 3 games. They lose 1 out of 3, right? And they're number 1, right? So they lose half as many games as they win, right?
So taking that into investing, does it matter how many losers you have if your winners win really, really big? Or does that only work in venture investing?
Well, that may or may not be true, but it doesn't help me today because I don't know whether any given investment is going to be a big winner. I don't know that, right? And so Buffett and Munger have a process, right? They know that X companies, look, other things can happen. Remember, one of the considerations is that their reasoning might be incorrect or their information might be incorrect, right? Maybe if a company is sold down, a good company, maybe the people selling know something that Warren and Charlie don't know, right? That's a risk. Now you can do your due diligence as much as you want, but those are always risks. So you have to focus on process. And that's true in life, right? You focus on the process and not any given outcome.
Now, taking two of the things that you said, and I'm going to use a baseball analogy now.
Okay,
luckily, I like baseball. Whether I know much about it's a different story.
Okay.
And this probably does apply to my experiences in venture and even earlier stage investing. Like I said, would you rather have a high batting average or a higher slugging percentage? Meaning, would I rather have 100 early stage investments where 95% of them were to nothing, 4 were okay, but one was a Facebook?
But again, Angelo, that's an interesting hypothetical, but you don't know today, as I survey investments, I don't know that I'm going to get the 100x, the 100 bagger, right? I don't know that sitting here today. I don't know that. And I think that the successful investors, not the lucky ones, the successful investors over time, where it truly is a matter of skill, the outperformance, not luck. And it's hard to, disentangle those two, skill versus luck. But is you play the odds and you don't swing for the fences, right? And so again, it's Buffett and Munger never lose money. And the reason for that, Angelo, is once you've lost money, you're moving forward with less to invest, right? So even if I lose half my money today, I got to double my money tomorrow just to get back to where I was yesterday. So you really want to work on protecting your downside. Think karate. The first thing they teach you is how to fall, because we don't want you to break your back in practice. So we're going to teach you how to fall defensively. Really, I think that's one thing that separates the winners is how they handle the losers, right? And if you're wrong, you have to acknowledge that pretty quickly. Get out of it.
Among those 12 that you noted, and again, we're doing a very broad number, maybe it's 9, maybe it's 17, but a dozen's an easy number to remember. Yeah. Obviously, we're not going to name names, but it would just strike me as over decades, some of them probably cheated. They had inside information. I can't believe that's not the case. Some of them went up to the law and maybe went a little bit over it. Some maybe right up to the line. But to get an edge, it's getting harder and harder.
Well, right. There was that reg 2000 where all information had to be disseminated at the same time. I mean, that made it a much more level playing field, right?
Yes.
You've got algorithms and you're competing against high frequency trading. It becomes harder and harder to have an edge, and that someone else hasn't stumbled on, right? It's very, very difficult, and so yes, it becomes increasingly competitive. But I think all the greats, when you read about them, again, it's a process. It doesn't mean any one investment they might have gotten lucky and heard something or skirted the law. But I think most of the great investors are great investors, not great cheaters.
Are ADRs a scam? Let me explain. Since ADRs are essentially investing in a shell company via contracts, they are backed by local shares that the bank owns. Should families, wealthy families, family offices invest in these shares, or is there a better option investing directly in shares?
Well, you mean ADRs like for foreign companies?
Yes.
Yeah, well, I mean, look at what's happened with Chinese stocks, right? I mean,
yes, look at it.
yeah. And again, I'm not singling out China, but if you throw in China within the basket of my earlier comment, the trade for the last 14 years has been long the US, short the rest of the world. I'm not saying that the rest of the world is going to go down. I'm just saying long US, short the rest of the world. You would have more than doubled your money with not too bad down, drawdowns. And this cycle of the US performance versus the rest of the world, I made a study of it going back over 100 years. And these cycles, US, so think of it as a race. You do race this way, and either the US is in the lead or the rest of the world is in the lead. And whichever gets in front usually stays in front for at least a decade and can be over 20 years. So we're 14 years into the US winning that race with no sign of an end, right? And if you tell me when will it end, I'd say, I don't know. I need to see some evidence of it. I'm not seeing it right now. The problem is that we're in a low growth world, Angelo. And in a low growth world, winners take all. The strongest companies, yes. The strongest sectors. So intra-sector, so within banking stocks haven't done too well as a class because interest rates have been declining forever. Well, not forever, but since what, 30 odd years. And so banks have not done well, but within banks, the best banks are going to outperform the worst banks. So within each sector, the best companies are going to outperform the worst companies over time, right? You get these wicked snapback rallies where the worst stocks can outperform the best stocks, for any 6-month period or something, especially coming off V bottoms, like last March 2020. A lot of the worst stocks got zoomed higher.
Yes, for sure. And we're going to get into money printing and government manipulation and things that potentially cause part of that. My audience knows sure. I bounce around all over the place. So I mentioned earlier the $1 billion example, and we spoke about Buffett. Somewhere in the back of my head, I remember Buffett somewhere in the last 10 years, and I'm going to use my verbiage, like if I had only, tongue-in-cheek here, only 100 million, 200 million, not the gazillions of billions that I have now in Berkshire. Imagine what I could do. Like my returns are somewhat curtailed by the size.
Of course.
Is that true in value investing?
Well, it's not true in value investing. It's true just when you have to deploy, I don't know what Berkshire's worth. Lots of hundreds of billions of dollars, right? Buffett's worth 100, he doesn't own the whole company. And so it becomes harder and harder when you get to size like that to find opportunities that are going to give you those kinds of returns that you could when you were, had only 100 million, right? And you find day traders who can spot, I don't know, penny stock or really cheap stocks, micro cap or small cap stocks that, they're going to go 2x or 5x in a couple of months. But you can't do that with, large cap stocks. It's just not going to happen, right? So of course the challenge is as you grow in size, the opportunities to deploy that money become increasingly the returns. Just as you go out the curve, the returns have to decline.
We'll be 95% investing. We'll get kind of off it for a second, though. When I spoke to you the last 2 times, you were in LA, you're in New York now. So you're seeing America's 2 biggest cities during COVID. I thought coming out of it, but now with Delta, some questions there. Many cities cannot get people back to work. How are we going to solve this?
Well, wait, what's the this you're talking about? Getting people back to work?
Yes.
Or well, you mean back to work, you mean back into the office or just off
Uh,
off
work in
unemployment?
everything, being a landscaper, working in a restaurant, especially more blue collar jobs where there may be more money or their perception of more money not working out. Let me put it another way. In Connecticut, where I am, my landscaper who has a pretty successful business, multiple restaurants that I visited, all of them, not some of them, all of them have said they are having a severely hard time finding enough workers. It's really, really hard.
Yeah. Well, so I think that goes to young people, right? I mean, the in like restaurant workers by and large tend to be younger than say on Wall Street or other domains. And and so I think young people have been really traumatized by the upheaval of the last year and a half, really traumatized. And and I think a lot of people are just sorting out their options and just, do I want to, even Wall Street, some of these investment banks have had to double salaries. It's not just, local restaurants having trouble getting waiters. It's Wall Street having trouble getting, junior analysts out of college. And so I think people are making lifestyle choices. And I think that's a part of it. And what, this has been a vast experiment that's been imposed on the entire world, this experiment. And I think people have come to decide that, or come to learn that they don't need to go into work every day. Businesses are discovering that too, right? We don't need the workers to come in every day, right? Like maybe 2 days a week would be nice. Some interaction. And that's, by the way, another thing that young people are really missing. Older people have established networks, right? And young people out of college and at the start of their careers, start of their adult lives, they don't have such networks. Right. And so not going into an office on a regular basis is really destabilizing. And I used the word before, traumatizing. And I think the global psyche has been traumatized greatly and is about to get re-traumatized, because I forget whether I mentioned one of my key indicators for tracking the coronavirus. I can't remember. We spoke about a year ago, and then actually about 6 months ago.
Yes.
So if you want to track the coronavirus, you just do a ratio of JETS, JETS. That's an ETF for global airline stocks.
Mm-hmm.
So long JETS, short VT. VT is an ETF for global equities. And that ratio peaked on March 15th and has been going straight line down ever since.
2020.
So no. That it was rocketing higher, especially after the vaccine, until March 15th. So this March 15th.
This year. Okay.
Yeah. So this is 5 months ago, it peaked and headed south. And by that, I mean, global airline stocks were plummeting relative to global equities. So at the same time, everyone was getting really excited about the vaccines. Global investors were given two massive thumbs down that life was going to get back to normal. That was 5 months ago, well before there was any talk about a Delta variant. By the way, March 15th was also the date, not coincidentally, the 10-year yields peaked at like 1.74%. They're 1.32% today. Right. And small caps also peaked on that date. A lot of things peaked on March 15th, key date. And it's when global investors started to bet against vaccines. When I say bet against vaccines, I mean bet against that life was going to return to normal.
Money is chasing like everything, or baseball cards, Pokemon cards, collectible cars. Are we in the bubble of everything?
Well, there's been a lot of money printing, right? The world is
Just a little.
awash in liquidity. And so, and I think people are quick to dismiss these things as fads. But if you know something, by the way, what I was talking about investing in the stock market and having an edge, it's not, could be very different in collecting coins. I don't know. Maybe you have an edge, Angelo, in ancient Roman coins, in which case, Godspeed, but stick to your domain, right? Your circle of competence. And I don't know if it's a bubble of everything. I don't. I know that the money, the Fed experiment, and it's not just a Fed experiment, central banks around the world, in lowering interest rates, have forced people seeking returns to seek riskier and riskier investments. And that's dangerous, right? And I don't know that we're going to get off that roller coaster, frankly. I don't know how we can. Every time they threaten to taper, the market collapses. And they go, oh, wait, we're not tapering yet. And they start printing more money. I don't know how they're going to get out of that one, frankly. It's not going to be a pretty end.
No, eventually it won't be. The U.S., speaking of something relative to that, the U.S. Treasury's debt outstanding is approaching 100% of GDP. How can the Fed ever raise interest rates without causing, maybe the greatest market crash in history?
Well, Janet Yellen did back in 2015, right? On December 9th, 2015, she raised interest rates. And I told my clients, interest rates are going to plunge. And sure enough, 7 months later into July, they plunged from 2.1% down to 1.37%. Back when 1.37% sounded like a low amount, right? We're below that level right now. So central bankers sometimes forget. They raise Angelo, we have to distinguish between raising the short-term rates, right? And the long-term, like the 10-year yields and the 20-year yields, right? If they tried to raise the short end, could precipitate a stock market crash. People go into bonds, and you find bonds, going through the roof. So in other words, they can raise interest rates, which can lower 10-year yields, which is to your point, right?
Yes,
a little bit of a counterintuitive.
Are we heading towards negative nominal interest rates in your lifetime in the US?
Well, not just nominal, interest rates were negative, right? And I'll tell you something, when you see that, Angelo, I'm surprised more hasn't been made of this. But given that we had negative interest rates, I don't know if any interest rates at this point are negative. Maybe one or two countries, maybe. There were 11 or 12 countries a year ago with negative interest rates. Not so now. But anyway, given the fact that we had negative interest rates, you would have thought that everyone would say, oh, if we have negative interest rates, what else don't we know about the wonderland that we find ourselves in, this economic wonderland? I don't mean wonderland in a good way.
I know you don't.
Yeah, in a bizarre way, right? Where things are going haywire. Given that, then all bets on classical analysis of markets, it's out the window, really out the window.
Yes.
So you hear talk, are we going to go into a recession? Are you kidding me? Like, a recession assumes an ongoing growth curve, right? And you're going to have a little dip. But we've been printing money for the last 15 years. And it doesn't look like we're going to stop.
No, I got some interesting questions on that one coming up. I'll do two questions. You made my heart sing when I gave you that $1 billion and be aggressive, and you spoke about some of the things that are of great interest to me. I'll hit on two of them.
Go for it.
Will the future of the Internet of Value incorporate NFT technology?
Well, what NFTs are just built on blockchain technologies. Are you asking? I'm not sure I understand the question.
Yeah, I mean, it's going to relate to the metaverse and what you mentioned earlier. I'll even give an example. Let's see if I could give an example from my perspective with my core company, Family Office Association, as a membership organization. I actually have experimented creating NFTs. So shockingly, I know how to do it. I might have forgot, but I took notes. I could create an NFT for my members where in theory, depending on the value of what they perceive they're getting, I may not allow them to sell or allow a new buyer to come in on that blockchain, but they could rent something specific. Angelo is doing an event with name the biggest name in finance. I can't go. I'm going to rent you my NFT token, so you're allowed to go. There's various examples I could give from people in arts, in modeling. So many dynamics of industry are changing where, I mean, I have someone I had on who's a 7-figure earner being a personal trainer effectively. And he's thinking about creating NFTs for his 1,000 true followers that are willing to pay a couple of dollars a day. With 1,000 or 2,000 fans, that adds up to real money. Well, I think NFTs are very intriguing.
I agree. NFTs and the multiverse, those worlds are highly intriguing. What's about to happen is these markets need to get liquid. That's the real challenge, right? If you buy a share of Tesla today, you can sell it tomorrow. You can sell it 2 minutes later. In fact, with high frequency trading, you often do. Sell 2 seconds later, and you picked up a penny. Yay! And so that's the challenge, and that's about to be solved. I know from firsthand knowledge that there's at least one exchange that's going to open up that you'll be able to trade anything on. So I'm going to go back in time, Angelo. About 25 years ago, a young fellow approached David Bowie. Do you remember Bowie bonds? Do you remember those?
I do remember. Yes, of course.
Okay. So for those watching us and don't know Bowie bonds, Bowie, yes, after the singer David Bowie, the singer and the artist, and by the way, a great art investor as well. Made a
absolutely.
Yeah, right. Investing in art, and so about 25 years ago, a young fellow approaches Bowie and says, "Mr. Bowie, I estimate that you make between $5 and $10 million a year on your back royalties." Bowie said, "Yes, that's about right." And he said, "How would you like to have the next 10 years of that money today?" David said, "Well, I think I would like that very much. How do we do that?" And this young man said, "We float a Bowie bond." And they sold $55 million worth of Bowie bonds. Now, the problem with Bowie bonds, so if you, Angelo, bought a Bowie bond, which is like buying an NFT, say, you have a Bowie bond and it's secured against his music royalties, which are pretty stable, probably still stable, right? You get a classical artist like that, yeah, they're going to be stable for a few generations, right? And so the problem was, if you bought a Bowie bond, you were stuck with it. There was no exchange that you could trade Bowie bonds on. But I will tell you, in the next year, next 1, 2, 3 years, you will find multiple exchanges where you can trade anything. And then the world becomes very, very interesting. Right now, if you wanted to make a bet, you, Angelo, on impressionist painters versus NFTs, it'd be hard to make that bet. But in a year or 2 or 3, you'll be able to make that on these exchanges that are about to go live. And they'll be highly liquid. So the interesting
Are these going to be available in the US? We always appear last on these kind of things.
Yeah. I for sure with accredited investors, for sure. And I assume it's just a matter of time before anyone is allowed to do it. So the world we're entering, which is very interesting, is you'll be able to bet on anything. Now, betting sounds like I'm like going to the horse races or something, but I don't mean it like that, where you will be able to calibrate around risk and make assessments and express those assessments with investments, right? With NFTs and with new products that are about to hit the market. This is actually a hugely exciting time.
Yeah, I mean, when I talk, my audience knows I've been very active in talking about crypto, digital, the metaverse, decentralized finance. I understand I'm in my mid-50s. This was not natural for me. COVID actually, because I couldn't go anywhere most of last year, it gave me a chance to explore, to research, to talk to thought leaders, and to form my own thesis, which is sometimes right and sometimes wrong. But to ignore that there is a burgeoning community out there, let's broadly call it digital asset. Some of it's going to go to crap, absolutely. But some of it will have massive returns, change everything that we know, and be here to stay. I just don't know what. I'm intrigued by all the things I noted. Investing in it is somewhat complex at the moment, but like Adam said, things are changing. My second part of that is the metaverse, as I would call it, the future of social media. Zuck at Facebook thinks so. The way some people think of Elon, and I'm a fan as well, I actually think Zuckerberg has been hand-tied. He would buy up every competitor if the US government would allow him to. Oh, you pay too much for this. You pay too much for Instagram. He paid too little. It's been amazing how those investments have done. Look up the metaverse and Mark Zuckerberg, how he thinks Facebook, if the government allows them, if they don't break everything up inside of Facebook, could be revolutionary. And as an American, look at the FAANGs. They're all US companies.
Well, yeah, he's also got, the large US tech companies also face EU legislative challenges, right?
Yeah,
it's not just the US legislative challenges. And, the multiverse doesn't depend on Zuckerberg. And I think, the key thing is, with the multiverse players and NFTs and digital assets broadly, really, this is revolutionary, really extraordinary. And it's more disruptive than crypto coins were. After all, crypto coins were just a digital version of things that we already use. But the NFTs and these other digital assets, these are entirely new asset classes, entirely new. It's not like they're a digital version of something we did before. And so they have their own rules, their own economics. And I will tell you, it goes back to our earlier discussion earlier today, Angelo, about having an edge. And the people who know this multiverse world, I will tell you, it's a handful of people who all know each other. It's a lot like crypto land in the cryptocurrencies, like in 2013, 2012, like right, when they were just beginning. There are like 50 people in the world who knew about them, and they all knew each other. So the deal flow, the best deal flow is passed among those players. And the same is true with the multiverse world. And it tends to be, most of the key players in this world are under 30.
Well under 30. And some of them I've been very fortunate to interview. It's been a very intriguing ride for someone. A year and a half, 2 years ago, I knew nothing about this. So you all could get up to snuff to at least be dangerous enough to form your own thesis. Adam, when I had you on, well, one question that I'll get to, a big question for you. We have an audience question. It's a little bit out of the box. I'm going to ask it.
Go for it.
Is Bezos a better allocator of capital than Buffett?
Well, remember, Buffett doesn't build businesses, he acquires them. right? Bezos is an entrepreneur. Bezos builds businesses, which is different from Buffett. Buffett is an investor. He acquires businesses. So it's really comparing apples and oranges. I don't think the comparison is fair, right?
You can make that point. It certainly is up to you to interpret and answer as you see fit.
Yeah.
When I had you on in January, there was one specific question and comment, and yes, it did relate to Bitcoin, that got the most emails and texts to me than I've ever received before about Angelo.
I am not surprised. I when I said it, I said, I know this is going to get me in hot water.
Yeah, it's gonna, and I'm not gonna let it go easily this time, but you can keep on saying no comment, no comment, no comment. Yeah. Angelo, you let it go too quick. You didn't follow up. You should at least gotten a little hint. For the audience that's listening to this for the first time, I'll set the stage a little bit. When you were on, you stated that Bitcoin, perhaps the smartest person you know told you there was a fatal...
Oh, wait a second. I said the smartest person in the Venn diagram overlap of technology and finance.
Okay.
I didn't say smartest person I knew.
Is there... So my question, and I'm pretty fluid on the subject, is there something in the code that could be exploited? Can all transactions be reversed? If someone has the keys to the 50 Genesis block, will miners never get paid again? Or can creators track, and is the creator the US government, can they track your IP address? Those are the best answers I've gotten so far as to what it could be. Are any of them correct?
Again, I wish I had my friend's expertise in.
But he must have told you something.
No, in fact, his statement was semi-public. Yeah, but.
Well, I mean, if it's semi-public, could you say who he is?
No, because then I would be pointing a finger at someone. No,
he must.
But if
I mean, is he proud of his opinion?
I'm sorry, what?
He's probably confident and proud of his opinion.
Yeah, but even his opinion, when expressed, was couched in questions. They weren't assertions; they were questions. Is it possible that Bitcoin could be mined for half as much energy? And if so, would that be a shorting opportunity? And so when someone asks a question like that, someone who is more versed in financial technology than anybody I know, it's not an idle hypothetical. So I assume the answer.
Is it a name in technology that we would know?
I'm sorry?
Is it a name that people in technology and finance would know?
No, not many people. No.
Okay, so not like
I'm not gonna disclose, his name.
We know you have an opinion on Bitcoin, and obviously the person you mentioned as well may have helped.
Wait a second. I want to be real clear, and I'm going to assert I don't have an opinion on Bitcoin. It's up for the people who argue that Bitcoin is not gambling.
Yeah, but the stock market is gambling.
Well, no, I took you through Warren and Charlie's analysis. It's not gambling. If you want to say that gambling on human enterprise is gambling, then everything under the sun is a gamble. I'm saying that insofar as human affairs, that we can know anything with any degree of certainty over time, it's that human beings get better able to do things, right? So human enterprise has to go up in value. It just does. Now, could we, again, yes, we had the dark ages and there were clearly technologies that we knew about 3,000, 4,000, 5,000 years ago, especially around stoneworking, masonry, that we have no idea. So we've lost some technologies, but by and large, we're better able to do things today than we were, 50 years ago and even 10 years ago. So that's not a gamble. and well, which is to say, it's as close to not gambling as I would defy anyone to come up with something that was more certain than that human ingenuity improved over time, right? Human technology improves over time. And so, which is a bet on companies. It's a bet on human enterprise. And so when I say Bitcoin is gambling, I have no idea. I don't have to establish that. I just say that you're making assertions. The acolytes of crypto coins are making assertions that they have no basis, no logical basis. They're just assertions.
Is there a chance, Adam, that in 50 years, Bitcoin is not only around, it's thriving?
Yeah, it's a chance it'll go to zero also. Do you
Absolutely.
want to take that chance? I'm just saying, do you want to take that chance? We have to draw a distinction, Angelo, about investing versus our primary source of income, right? Investing for most people, including ultra high net worth families, they make their money elsewhere. And then they have some excess, having made that money, whatever they didn't spend this year, they can now invest. And so that tends to be a more passive than, you could make your money in any number of ways. You could own McDonald's franchise, make your money that way, or starting companies, right? I am sure Bezos has an investment arm, right? His family office. Same with Zuckerberg. They're making their money by building businesses. But the excess that they don't spend, they're going to invest that passively. And so there.
Is there any bit of information that can make you change your mind about Bitcoin?
Well, I don't know, but it's not here for me now. If I see, I don't know. That's like saying, is there anything that would convince? There's a show, Ancient Aliens, on TV.
Yes, there is.
Right? And the refrain on every show is it possible that aliens built the pyramids? And is it possible that aliens wrote the Declaration of Independence? Yeah, I suppose it's possible. What's your point? And so, is there anything that would make me believe in aliens? Yeah, flying saucer coming down, or some evidence. They get the Goodyear blimp. And we're aliens. There are various. So as I sit here now, I have no idea.
And is it fair to lump in some of the platforms that are developmental with DeFi, like Ethereum, like Polka, like Solana?
But I've already distinguished that. I said I'm a big believer in blockchain and the technologies. I'm a huge proponent. I think that is absolutely going to be revolutionary. And it already is revolutionary. We're just going to see the impact in our life, in the next few years. So it's coins. And the people around coins, they something that gets me suspicious about coins in general is they're always zealots. They're evangelists for coins.
Yeah, they're called maximalists in the Bitcoin community. They are a little unusual.
The question, right? So Angelo, the question is not for me. What would I need to see to change my view on Bitcoin? It's what would they need to see? I'm not asserting anything about Bitcoin.
Well,
right?
They've been pretty accurate so far.
What's that?
As much as I sometimes needle them a little bit too.
Right. So it's up to anyone arguing in favor of crypto coins. What would you need to see to tell you were wrong?
Yeah, but that works the other way as well. A question I would have for you on that is the US government is effectively passing legislation as we talk. There's senators like Senator Loomis that are big supporters that own it. There's a futures contract. There's Coinbase, a public company that the SEC had to approve. The US, although they may talk one way, they appear to be somewhat behind the employment of people, the fact that tens of millions of Americans to some degree have an investment. And again, I may think they may have indirectly in the past have had an involvement. And this may be a grand experiment, I don't know. But to think that it's not getting traction, both with people and even some level of government controls, AKA futures contracts, makes it appear a little bit more legitimate to me. Am I wrong? Say yes and tell me why.
No, I don't know whether you're wrong, and we'll see over time. You know, it's clear that you know, if, by the way, even if Bitcoin went to 1 million, it would not surprise me one bit. I mean this literally. If Bitcoin were $1 million a year from now, wouldn't surprise me.
Well, then why aren't you putting 1% of your money in it?
I haven't finished. Wait, and it wouldn't surprise me if it went to zero. Neither outcome would surprise me. And I just don't have an edge in that domain. There are better bets that I can play. I know where my edge lies. So why would I be investing in crypto?
If it were to go from 46,000 now to 1 million, that's a hell of an X return in 1, or let's even say 18 months, 1 year, 18 months.
Of course.
What else could I invest in that's going to get the returns that you may be thinking of? I want to know about it. It's not gold.
Wait, Angelo, but we don't know what I just said. And if it goes to zero, you would have been better off leaving your money in your mattress. But
if it was 1 or 2%, it was worth the asymmetrical play.
But we don't know that here. We have to make our investment decisions today, not a year from now, looking back in hindsight and going, oh, I should have shorted Bitcoin. It went to zero. Or, oh, I was a fool. I didn't get into Bitcoin. It went to 1 million. There's that great proverb, no one ever invested enough money on a winning horse. Like you always, oh man, I should have put more money on that horse. Or I should have put more money in the stock. You know, you think about someone who invested $1,000 in Berkshire back in what, 65 or something, and go, oh man, I wish I'd invested 10,000 instead of 1,000. And yeah, you can't, again, you have to have a process and stick to it and know what your edge is. Really, think about it. That asymmetric return, $1 million or zero, that's the essence of gambling. If I'm right, I'm going to be rich. If I'm wrong, I've lost.
The odds are it's going to be neither. It won't be that extreme either way.
I don't know how you can formulate those odds, Angelo. Really, I don't know. I can't do it. I don't know on what basis you say that. I'm not disagreeing with you, but I have no opinion on the odds, which is why I don't think about it. I devote zero. We talked earlier about curiosity. I'm not even curious about it because I don't have an edge. And I know where I do have an edge, and I'm going to stick to those domains. And anyone in investing, really, if you don't know a ton about crypto, you're up against people who do know a ton. Remember that. It's a zero-sum game when it comes to, crypto coins.
I'm going to phrase a question which is getting off the subject. We may come back to it. We'll see. So actually, speaking of Bitcoin, I had a very prominent proponent. It's my most downloaded video ever with Michael Saylor about 6 months ago, a little after I had you on. And he said on inflation, nothing to do with Bitcoin. On inflation, one, you can't believe the government's numbers. And two, it depends on your situation. If you're a really rich person who's a bit of a spendthrift, you buy art, you want to buy more stocks and they're going up. You buy.
Angelo, I said the same thing to you. I said there's been massive inflation. It's been in asset prices. Yeah.
Yes. But in the example that you gave earlier, for a family that is not Jeff Bezos and owns an amazing operating company, they sold their operating company. Investments are their lifeblood now. Could you make the argument if they play it too safe, net of taxes and inflation, keyword there, inflation, if they're spending money, getting 5 or 6% net returns over decades may not cut it?
Well, I don't know. It's really tough. It's unclear to me that people have been talking about inflation, and my rebuttal is 10-year yields. If you're going to have inflation, you'd see interest rates moving higher. They're not moving higher. right? They stalled out at 1.74% on March 15th, right? They hit a bottom sometime in August of 2020. I forget August what, but sometime in August, late August, at what, 0.61, 0.3. Actually, I think there was a print on the 10-year yield of 0.3%. I don't know if it closed at that. But anyway, the inflation expectations hit 7-year highs recently. The same time, 10-year yields were nowhere near 7-year highs. They in fact, they stalled out halfway and have since been moving straight line down. And so that's the problem with inflation projections. And, you know, it's 10-year yields. 10-year yields are the most important. If somebody wanted to look at one economic factor in the world right now, it'd be US 10-year yields, right? If they're going down, the world is having a hard time. And when the world has a hard time, the strongest companies massively outperform. And it doesn't seem like we're going to see any change in that until we do.
Are businesses with pricing power a hedge for inflation?
Well, yeah. I mean, that's a tautology. If you can price in, pricing power means if my costs go up, I can pass it on to the consumer, and the consumer, inelastic demand, they got to buy the stuff, you know? And I would assume that's true in, you know, I guess staples, things like food, right? We have to eat. But I don't know too many companies that have, you know, the pricing power that you refer to.
Oh, yeah, I would assume there's very few. Yeah. Is farmland a hedge for inflation?
I don't know. We clearly have to eat, right? And it's unclear to me now. You know, the problem with real estate is the linear thinking that people approach it with. So most people's analysis of real estate goes along the following lines. Given that there's a limited amount of land in the world, and given that population is increasing, ergo, the value of land must increase. Well, first of all, the second premise that the population is increasing, we talked about that in our last conversation. It's been decreasing in the developed world, right? US, Europe, Canada, Australia, Japan. I hate this word, but every developed country in the world, the population has been shrinking for a number of years. And so to go back to farmland, are people going to need more? Is the value of farmland going to increase from today? I don't know. Maybe someone's going to invent hydroponic technology, and all of a sudden you don't need farmland anymore. We could just have floating tanks of water that we're going to grow the crops there. No, we don't need it. So I don't know. In other words, I know that people need food. I just don't know whether farmland has been appropriately priced here. So I don't know that. It's outside my specialty.
I mean, I would say basically that I'm on the same page, but I'm going to rephrase the question a little differently. The question basically is, what is a hedge for inflation? The honest answer is, I don't know. It's been different things over different times, looking decade after decade. Has it been real estate? Has it been farmland? In Argentina, was it the US dollar? Has it been gold? It's been all those things at various times. I have no idea what it's going to be if we have inflation or hyperinflation moving forward. I just don't know.
Well, I want to tell you, Angelo, when I was a teenager at Wharton, they were talking about hyperinflation. I mean, everything they're saying about Bitcoin, they were saying about gold when I was a teenager. Everything they're saying. The US government is printing money. Gold has to go to $50,000, $100,000 an ounce. It has to. And so all these arguments I've heard before. That's why I'm not impressed by them. That doesn't mean one day, eventually they're going to be proven right. It's that old broken clock is right twice a day. Eventually, if somebody keeps saying, oh, the value of gold is going to go to $100,000, maybe one day they'll be right. I don't know. So I don't know about hyperinflation. We just haven't seen any. And here's the thing. That's actually the big question for advocates of hyperinflation, given the amount of money printing, given that, why haven't we seen it? Why hasn't there been hyperinflation?
Exactly. That was one of my questions for you. So you beat me to the punch.
It doesn't matter. I don't have to answer it. It just means that there are very powerful forces at work, very powerful, that are keeping a lid on inflation. Otherwise, we would have had hyperinflation. Now, again, I think we have seen inflation in asset prices, right?
Yes.
If you print the money, governments have printed money. That money has to go somewhere, has to find a home. And the home has been stock prices or art or heck, NFTs. I know it's teeny, it's infinitesimal, but it's gone into artwork, farmland. It's gone into those things. And so it's unclear it's not unclear. It just hasn't gone into, say, I don't know, food. If you divide the value of the stock market by food prices, stocks have outperformed food. Right? The money that the government has printed, Wall Street and other investors have said, thank you so much. We're going to buy stocks with that.
Oh, yes.
Not loaves of bread.
No, and that's worked out better.
And we're not bidding up the wages of workers either. This isn't like the 70s.
Absolutely. That's another point. But going back to my earlier point, yeah, at one time, I guess you could look at 1 year or 5 years where it probably was. Is gold a hedge for inflation? Where did this misnomer happen? I just don't see it. I think it may be a better hedge of deflation.
Well, yes, of course it is. I mean, gold has had zero correlation with inflation expectations over the last 25 years. Zero. The correlation with interest rates, inversely, is like 0.9. It's
wow.
So when interest rates, when interest rates go down, gold goes up. Gold is a deflation play, not an inflation play. The way to think about it is gold is shiny copper that you have to store, right? After all, if the value of money is going down, then the value of everything, peanut butter, is going to go up, right? If the dollar's going down, the price of peanut butter is going up when priced in dollars, right? Everything goes up in value. And the problem with gold is you have to store it. So gold moves inversely with interest rates. Gold is really an interest rate play, not an inflation play. Inflation plays, you want to go into like oil and copper, or in companies that sell oil or sell it, extract it, refine it, mine it.
Do you think that we're going to hit $100 a barrel this year?
I will tell you one thing. If you look at the relative performance of energy stocks, so that's RYE is the ETF, RYE relative to RSP, that's the equal weighted S&P 500. Energy stocks are year-to-date lows relative to the broad market. So right. I'll tell you, energy stocks are not seeing $100 oil. They're not seeing it. If we were going to see $100 oil, you would see energy stocks going through the roof, and we're not. They're at 7-month lows relative to the broad market. So I don't know, Angelo. I never expressed an opinion. I'm just telling you what investors think. And investors are telling you, investors in energy stocks, no, they're not betting on $100 oil.
You said something about a couple of minutes ago relative to there's like forces at work relative to inflation. Let me go a little bit into that. So the president's working order on financial markets the plunge protection team, I guess, goes back to 1989. It helps to keep the stock market, so-called, from wild swings, although I could argue it's been various years where it didn't work so well. What I am going to state, though, is this is manipulation, but I guess welcome to the real world where central banks and certain family dynasties may have a lot of power to make these things happen.
Yes, that is true. I don't know what else I can add to that. Yes, that is so. That is so. It's yes.
Yeah, I mean, it's probably better so we don't get kicked off YouTube that I don't talk too much about it. But why don't we just leave it at saying that central banks and select dynastic families that many of you have probably never heard of before are incredibly influential to what happens in our financial markets. You're foolish if you don't feel that way. And it's not the people that you think it is. It's not how much money you have, it's how much money you control.
Yeah, I would agree with that. Other than that, I'm just going to say no comment.
I think that's a wise move.
I agree.
Is Markel, aka the baby Berkshire, now a better buy than Berkshire due to its much smaller size?
Well, I don't know. There, I've answered it. I don't know.
That's always a good answer. I heard economist Lacey Hunt say, in paraphrasing, there's only two ways out of this debt mess. One, hyperinflation, and two, a major tech upgrade. I found those interesting comments. Do you agree or disagree?
Well, I think one of the problems with Silicon Valley and really with us as a species is we think we can pull rabbits out of a hat, right? We think technology, we're brilliant, we can find some way out of this mess. And I don't see an easy path, frankly. And again, if we were going to have hyperinflation, we would have had it a while ago, right? I mean, it's unclear that that's going to happen. I think the greater threat is deflation, right? And that's a real problem. And with negative interest rates, think about it, Angelo. We were in a world, we're in the same world. We are in a world where for a number of years, borrowers were paid to borrow money. Lenders paid for the privilege of lending money. And right there, that should tell you, all my analysis is wrong. I am an admirer of Lacey Hunt. Brilliant. However, whenever people make absolute statements like that, the only way out is A or B. They're always surprised by C. Right?
It's the unknown unknowns. It's the bus you see that. It's the bus you don't see coming that gets you.
Yeah. So again, he is brilliant, and I understand his analysis. Sure.
Yeah. I read somewhere that three things cause consumer inflation. One, raising wages, hard to take back. Two, price controls. And three, supply chain shortages. Again, agree or disagree?
Well, no, I mean, I think that's certainly the conventional economic view, right? We all took economics in college, and yeah, I mean, that's certainly important. I took a bunch of economics courses, and that's certainly the standard view. But again, I think we are in Wonderland territory right now. This is really terra nova, right? New country, terra incognita. We don't know what's going on here. And so absolute statements like that are, and I'm going to hold myself accountable. I said earlier, you're not going to have inflation without higher interest rates. Maybe I'm wrong about that. We just never have seen that, but we never saw negative interest rates either until we did. So I think that's true, but again, that's the classical view. Could there be another cause of inflation? Yeah. But
I mean, apparently, money printing alone does not cause inflation. I don't know if I meant that tongue in cheek or not.
well, think about it. It only causes inflation in the traditional view if you have more money. If the amount of money, if every U.S. citizen was doubled, doubled their money overnight. That doesn't mean they're going to bid up the price of a can of Coca-Cola to double, right? If everyone got double the money they have today, tomorrow, it's not like they're going to bid up everything twice as much. Certain assets are going to go through the roof,
Right.
right? But not everything, which is why even, Angelo, even, I think you put your finger on it earlier. You've distinguished between different types of inflation, right? Consumer inflation, asset price inflation. And so the word inflation, and even if you wanted to say hyperinflation, there might be hyperinflation in the crypto market. Maybe.
Right.
Maybe it'll happen, right? And deflation in stocks. I don't know. But I will tell you one thing. This is if the most important thing that I've ever said on any of our podcasts has been beware of things that don't make sense, right? When they move counter to what you expect, because those are always powerful forces at work, and they're just beginning to work because you haven't figured it out. This doesn't make any sense. Why has crypto dropped in half overnight? Oh, it doesn't make any sense. It's a great buying opportunity. Oh, maybe not. Maybe it's a good shorting opportunity. So when things move counter to your expectations, that's when the analysis begins. For most people, it ends there. They go, that doesn't make any sense. They just shrug their shoulders. But that's where the Sam Zells and the Warren Buffetts go, what's this about?
This question potentially ties in. It would be interesting what it does to population and food and families. Is aging a disease that you think within 20 years will cure?
Angelo, I don't know. And I don't know if it's going to be aliens that cure it for us. I just don't know. And so, I have no idea. I know that, again, there's a lot of that Silicon Valley hubris. We're going to hack death, and it's, I think what we got to figure out how to keep our current lives better, the people living today, and a lot of that ingenuity, just making lives better today, rather than trying to extend the human lifespan 500 years. For most people, life is very difficult, and extending it another 400 years is a dubious thing. When you can improve the quality of their lives today, that can be done today.
I think we discussed the next question somewhat earlier. I'll state it and maybe give a super quick answer. Will the upcoming modern industrial revolution be fueled by 3D printing, biomanufacturing, automation, space tech? We discussed earlier what to do with $1 billion and you want to be aggressive. The obvious answer is it could be. How do you invest? I'm assuming pick the right venture capital funds.
Yeah. And by the way, that's something where an investor might have an edge within a particular domain. Remember, I referred to that earlier. You could have an edge with, I don't know, metal, or you could have an edge with restaurants because you operate a lot of restaurants, or around businesses, which is different from investing, obviously, in restaurant stocks, say. I don't know. And you and I did speak about this. I think the real game changer is going to be AI. That's the real game changer. And 15, 20 years from now, algorithms are going to do, we could debate whether it's 15 years or 50 years. But real soon, algorithms are going to do everything better than human beings. Everything, full stop. including investing. And think about it. The algorithms will have searched out all the opportunities and already made the decisions, right? There's not going to be any. Investing opportunities come because someone farsighted has calibrated around a risk better than other people. But when algorithms do that better than all human beings, the investing game is over. Really, I think the investing game is over. Certainly 50 years from now, totally over. You'll have algorithms doing that much better than human beings. And the algorithms will be competing with each other, right?
We actually did discuss that in a live podcast, but unfortunately, the audio got so messed up, it was not able to be published. We spoke a little bit about that in January, and we went down a rabbit hole that could also lead to some trouble. And that basically was, besides AI, factoring algorithms, quantum computing, how gravely we underestimate how powerful governments are, US, China, etc., Russia, and do not underestimate their capability, their money. They have the ultimate power. It's called violence, by the way. Let's not delve too deeply into that. I'll get in more trouble. But to think that they don't have incredibly powerful resources, computers, and eventually, whether 1 year or 30 years, quantum computing, and then much of what we know in banks, institutions, maybe crypto, could be gravely challenged. There may be ways to counterbalance that. I get it. But
I get that about, and I agree with you about the power of governments. I totally get that. I think governments may have misjudged the power of human beings to rebel. And you're beginning to see increasing numbers around the world,
including here in the U.S.
Yeah,
obviously.
That's what I meant. We're part of that world.
Yeah.
And increasingly people saying, no, not going to do that. Make me. Really, a lot of it is make me. And I think governments may have overplayed their hands, frankly. I'm not making a political comment about any country here. It's a global comment. It's just an intuitive sense that we're going to see increasing demonstrations and pushback against authoritarian measures. We're going to see that.
We are 100% on the same page. If modern monetary theory is so good and you can print money, why do we pay taxes? Adam, why do we pay taxes? I think I have an answer, but I want to hear yours.
Oh, I don't know. I could give a cynical answer, right?
Yes, give me the cynical answer.
Well, to pay for government, because in other words, the people we elect vote in policies that ensure that they are needed, and it's no surprise that the Libertarian Party has never found many has not found many followers, right? Because because the Libertarian Party says everything that you get is a result of your efforts, and then you got all the other parties over here going, yeah, but we'll give you stuff. Oh, in that popularity contest, I know who wins. And so it's, it was Calvin Coolidge who said, it's amazing what you can do when you don't care who gets the credit. It's also amazing what you can give to people when you don't care who pays for it. Right? Yeah. You give people lots of promises, and it's amazing that I'm surprised for all the rampant cynicism in the world and the nihilism that people still believe political promises. Really,
Yeah, I hear you. I mean, I would say from how I described it, when governments could print money, apparently, and again, I mean that just a little tongue in cheek, why pay taxes? Somewhat along your theme, but maybe a little bit more cynical. It's control. It's control of the people. It's because they can, for the reasons that I mentioned earlier, through contract law, through military, through violence. But
it's also, governments do provide certain functions. For example, I think governments could find ways to monitor and maintain the commons, right? The tragedy of the commons, which is one of the big economic fiascos of capitalism. There's no accounting for the commons, right? And if you can offload your costs to the commons or to future generations, you're going to do pretty well because you don't have to bear those costs. So I think we have to address that. I think the government, I think there is a legitimate, I say this as a diehard individualist, and I believe in capitalism and succeeding on my merits and my enterprise. That Buffett has said that he has done well, he and Charlie have done very well because their particular skill set has been valued in the modern era. But 500 years ago wouldn't have been valued, that particular skill set. But they probably would have been court advisors, right? I'm sure they would have done something pretty darn well. But so they have said, given that the wealth that they've been able to acquire has largely been an accident of their birth and their particular genetics, yeah, we don't mind giving some of it away to people who didn't do so well in the genetic lottery. Again, I am a capitalist and a libertarian and an individualist, and I'm not talking about just mass redistribution of things. But I do think that the excesses of capitalism have to be tempered. And so I think there's some legitimate, so when you say, why are we taxed? I can see that, there are families that are struggling that should get health care. And there are people who would be willing to pay for that with more money.
Unless we lose reserve currency status and can't borrow in our currency, could I argue hyperinflation will never happen?
Angelo, you can argue anything you want. I don't know. I don't know. And the thing is, we'll begin to see certain, what's the word? Portents. We'll see signs that we're gonna, if hyperinflation is not gonna come overnight, it's not, right? We'll start to see it. US interest rates will spike here. If US interest rates were to spike from here to say 3 or 4%, I say interest rates, 10-year yields, I begin to get alarmed, right? If US interest rates were to hit 8, 10-year highs in today's world, we're likely going to see inflation, massive inflation. But until we do, with interest rates going lower, so in other words, we don't have to speculate on that, right? We'll see signs of it. It's not going to hit us. It's not going to be a black swan. It's not going to be overnight.
Oh, for sure. Decades from now, maybe sooner, will eventually technology, I think you just kind of mentioned this 5 minutes ago, make housing, food, transportation basically free. And to some degree, given loss of jobs, will governments kind of have to provide this to its populace?
Well, that's kind of right. That's UBI, right? Universal Basic Income.
Okay.
And it's right. You just didn't want to say it. I said it for you. So yeah, we're moving towards that, right? And we're in a world, we're moving towards a world where technology has made a lot of what we need, like entertainment. I don't mean we, you and I, but people seem to want and need cheaper and cheaper. Yeah, I think it's possible that the cost of living, the actual cost of living, is going to be brought down pretty low, and then people's needs will be provided for. But the real need that people have right now in the world, Angelo, is a need for meaning and connection, and that's not going to come about with universal basic income. Not going to happen, right? That's a whole nother challenge of the modern condition, and just people shouldn't have to worry about food, should not have to worry about food, not in today's world, right? That's, for me, a sin, that people worry about food and worry about healthcare. That shouldn't be the case. And a basic education. But I say basic, basic skills. We should have that in the world. We're certainly wealthy enough as a world to make sure that's a given. But yeah, it's universal basic income is not going to deal with we're in a crisis of the soul, Angelo. That's really what's going on in the world. The question is, Angelo, why have we piled up the debt? We've piled up the debt because people have wanted things. They think, I want two of everything. I want what mom and dad had. I just want more of it. And I'll tell you something, the same workers, to go back to what your comment was earlier, Angelo, the same workers who are former workers who are going, no, I quit. I'm not going back to work. I'm going to take a year or two off, think about my life. Have rejected that consumerism, right? It's right. People really under the age of 30, maybe 35, but certainly under the age of 30 and definitely under the age of 25. Oh, they basically rejected the premises that you and I grew up with, right? A better life. We want standard of living, and it's all being reevaluated, including work. But they're not any closer, the young people, to any insights on the human condition and meaning and connection, meaningful connection with others. It's really a soul crisis.
We're heading to our last 30 minutes with Adam. It's been a great pleasure. I normally don't do a little bit of a break somewhere in between, but I'll do a little bit of a quasi family office association, very brief infomercial. And many of you, I do appreciate following me on social media, on Instagram and YouTube. And I do enjoy giving some value to people to get awareness to what we do and hopefully to educate. But those that want even a far deeper dive and want to be live participants, want access to our master classes, our roundtables, our gatherings, you really need to join an organization like Family Office Association. It's very simple, familyofficeassociation.com, and you can figure it out. And depending on when you're listening to this, on September 13th, we're recording early mid-August now. On September 13th, I'm flying down to Palm Beach to do an interview with Tony Robbins, which I very much look forward to. My members will have live access to it as it's happening in their professional or in his professional studios with 30-foot screens. I can't wait. It'll be a lot of fun. And it mainly is going to be an investing conversation. So I very much look forward to that. And again, my members will start to get notices on that in the next week. That is September 13th. So very simply, stay tuned. Adam, going back to the future that we both hinted at a little while ago, and I want to be also careful how I phrase my words. There's definitely more have-nots than haves. And if some of the things that we speak about come to fruition, the government probably is going to have to provide some level of housing, food, and possibly education, et cetera, support. We are, and this is where some of my members who have been worked hard and maybe been fortunate have looked at and say, Angelo, are we heading to a world where someone like AOC in 4, 8, 12 years, whatever, could be president? And could wealth be so redistributed, as made up my own word, but could taxes be 90%? Could this happen? Could that happen? I would say probably unlikely, but am I going to say that's under 1%? No, it's definitely more than 1%. I don't have a great answer for these people on these things. Some level jurisdictional fluidity, global assets, multiple residences, residency, dual citizenship, 3 or 4 citizenships. I have my preferences: New Zealand, Ireland, Malta, Canada, and I have done research on it for some of my members as consulting projects.
I thought you were looking to get a citizenship at Ibiza.
So, I mean, these things could happen. Is the US as we know it could radically change.
Well, yeah, sure. I mean, anything can happen. It's not going to happen overnight, right? We'll begin to see signs of it. We'll begin to see signs of it, right? And people will, though, it's interesting. You used a phrase, the government will have to provide housing. What you really meant to say was the government will have to tax the people with money and give it to people without so they can have housing, which is to say, and even the word tax, we should be explicit. Take the money.
Yeah, it's confiscation.
People who have it and give it to people who don't, right? And so, yeah, we could definitely see that. We could definitely see that. And I know, a lot of work has been done on the cyclical nature of history. There's that book, The Fourth Turning, which
is great book.
Right, great book, very insightful.
I tried to get him on. It hasn't worked so far.
Yeah. It's but it's very offer, and of course they weren't the first. Thomas Jefferson and others even before him have spoken about cycles in history, and so yeah, we could see a massive pushback on wealth and just an entitlement, and yeah, I want that. It's not fair. The way to think about it, Angelo, is that the capitalist ladder, working your way up, that people were okay with wealth inequality as long as they felt they had a shot or their kids had a shot at rising the ladder. But as soon as you realize, or people think they realize, that there's no ladder, maybe there never was, oh, then I'm not okay with the wealth inequality. I thought I had a shot. I thought if I played by the rules, I might get up the ladder. No. And I think there's been a lot of resentment and rage about that, about having been played.
Well, let's bring up an example of that. I'm going to take a different perspective than what people may have heard me say in the last couple of minutes. I think we're going to hit a revolution with the Generation Z saying, I have all this student debt, multiple of 6 figures. You said I needed to go to college. I needed to get an education. That would get me a job and security. Yet you bail out these big corporations and companies. That's unfair. And I am not so sure that they're not incorrect about that.
Well, yeah, I about 5-6 years ago, I was at a picnic and got to talking with a woman, and she confessed that she had to sell her family home. And I said, oh, why? She was visibly upset. It was a recent occurrence. And she said, well, my 2 sons just graduated from college and they had so much debt that they couldn't, as their parents, right? Parents co-sign on the debt. It's not like it's not student debt. They should say student and parent debt. In fact, they should say family permanent debt. Because, by the way, even, God forbid, the kids can't work anymore for whatever reason, the parents are still liable.
Absolutely.
You don't ever get away from that debt. And so, anyway, so I asked her, well, how much debt did they accumulate? $250,000. Now, they went to a college in a major urban, a decent college, right? And so 2 sons acquired each about $125,000 in debt. I asked her, as wasn't like an interrogation, right? Because she's confessing, oh, I just had to sell my house. They were both film majors. Right, now you laugh.
Yeah, I'm laughing.
I didn't want to, no. I mean, so I had to, again, I didn't want to grill her because she wasn't a statistic. She was a human being confessing that she had to sell her family home because she couldn't meet the mortgages and their student loan debt. So I said, as politely as I could, what was your thinking? And she said, well, I just thought they would get jobs, which is to say she didn't think. She didn't analyze that at all. If she had bought a Toyota, she would have looked at the gas mileage, the depreciation, the resale value. She would have checked all that out. And she didn't. So so the disillusion that people are encountering, here's something that everybody knows, Angelo, and you have to look at me when I say this. Everybody knows, because I'm using air quotes, everybody knows that college education is a good investment. Sure, if you go to a good college and you work your butt off and you learn a lot in a major that is in demand, right?
That's a lot of qualifications.
A lot of qualifications. For most people, when I was in school eons ago, and a college education was a tenth the current price annually, right? A tenth the current price, actually less than a tenth. I thought it was a ripoff then. And I went to the best schools in the country, in the world. And I thought it was a ripoff. I thought, oh, look at I just looked around at Wharton and Oxford. I thought, oh, they're spending all this money on stuff they don't have to spend it on. It's a ripoff. It could be done more efficiently, right? And I started an education company, right? Princeton Review, with a friend. And so yeah, they are rightly enraged, but no one ever told them that. No one ever said, go to college, get in debt, and you're going to go out and get a job. You know, people, this happens even with people who've graduated from law school.
Of course.
They have the undergrad debt and then law school. And then they're discovering, oh, no, we don't need you. Right. And now they're $200,000-$300,000 in debt. Good luck paying that off.
Yeah, I mean, some irony there. Besides that huge debt, they were probably under the impression there's an endless supply of lawyers. We're always going to need them. Technology is not going to disrupt it in any way. And my technical knowledge as a lawyer is all that matters. To make the big money as an attorney, you need to be a partner. How do you become a partner? You better be a good salesperson, have great EQ, interact, know how to close business. That matters way more than being 5% better technically.
Yeah, and it's, you know, it'd be one thing if people went to law school because they said, oh, I just love the law. But
there's a couple.
No, they don't really, you know, and it'd be okay if someone said, I'm going to go to Wall Street because I just love analyzing stocks, just so much fun. But no, they don't analyze things in the way that a good entrepreneur would analyze them, right? No entrepreneur is going to go, well, I think there's going to be demand for edible furniture. I think there's going to be demand for that. I'm going to start a company, invest my life savings in that. And, you know, we don't do that. We have to actually do studies. With all that analysis, we can be wrong, but you can be sure we investigate it. We don't just assume, oh yeah, I'm going to start an edible furniture company. And if you don't like it, you can eat it. Yeah.
Adam,
yeah.
Why is the dollar up year to date as measured by the Dixie? Wasn't the world predicting its demise? The dollar's dead. It's not so dead, is it?
Well, it was obvious at the beginning of the year. At the beginning of the year, Angelo, dollar had to go higher. This is when everybody, including some very famous people, were predicting the dollar was going to tank. There was a big problem, which is that U.S. interest rates were at the time near one-year highs. At the same time, global interest rates were near all-time lows. And that interest rate differential meant that the dollar had to reverse. Just the pure economics that you could earn more money on U.S. investments, U.S. bonds, than you could elsewhere. So that started it. And by the way, that also began to put the brakes on inflation, because you had the dollar going up, you had the Canadian and Australian dollars going down, and those are the two currencies most correlated with inflation. especially the Canadian dollar, which is the currency most correlated with oil.
Huh. I didn't know that.
Yeah.
If the dollar is strengthening, we hinted at this earlier. If the dollar is strengthening, then why isn't gold going up?
Well, we talked about that earlier. If the dollar goes up, then the cost of everything measured in dollars goes down because the dollar is in the denominator.
Yeah, measured in
right?
dollars is key. Right.
Yeah. So yeah, by the way, gold hit all-time highs against a lot of currencies before it did in the dollar, like recently, like against the euro, and there's a bunch of other currencies where gold priced in those currencies hit all-time highs. Gold per euro hit all-time highs way before the gold priced in dollars did.
If all, which I know it's not literally all, but if all countries are printing money, then I guess we're all devaluing at once.
Exactly. That right there is why the dollar hasn't tanked, because all countries are aggressively doing what they can to print money and to value their currencies. You know, that's, by the way, that's how wars start, right?
Yes.
Currency wars start first, then you get trade wars, then you get wars. And so these things don't, again, the currency wars, which preceded the trade wars, and you're right, there could be real supply shock threats. You asked me in our last conversation about 6 months ago about semiconductors and transistors.
I did.
And yeah, and that, oh boy, there are real potential supply shocks that could come. I'm not seeing any evidence of it, right? It's not like semiconductor stocks have doubled overnight. We would begin to see some evidence of those supply shocks. If they're international, you'll see it in the price of gold or a currency, like the Japanese yen goes through the roof, be up 5% overnight. That doesn't sound like much to people, but 5% overnight, that's a huge currency move. Or gold going up 10%. If we're going to see those kinds of international shocks, that we'll have advanced warning. They're not going to hit us totally by surprise.
I think we're on the same page with this, but keeping money in foreign savings accounts and CDs, does this hedge a dollar collapse? Are you kidding me? Dollar collapses, foreign stocks are impacted. It's all tied to the dollar.
You mean, well, yeah, I don't know. Before there's a dollar collapse, I promise you, we'll see tons of other currencies collapse. I don't mean like Venezuela, you know, like some South American country that's having hyperinflation. I mean, we'll see a major European, like the euro collapse, right? In fact, if I had to put money on something, I think the euro is a good bet for. So if you want to look at that, look at the euro franc, which is the currency symbol is EURCHF, the euro versus the Swiss franc. Because when Europeans dump money, or they get
Where do they
scared,
put it?
they put it in Switzerland. Just like in Asia, they tend to put it in Japan, in yen.
Oh, the yen, okay.
Right, so those are the safe haven. Well, before the dollar collapses, we'll see a collapse in some other currency. Not going to be the dollar first. No way. No way.
In the project that I mentioned earlier, from having what I call jurisdictional fluidity and hedging various risks, I did forget to mention Switzerland. It's very hard. It's a 10-year process, by the way, to be a citizen. But if you become a citizen of Malta, you could certainly have access. So what I recommend to many family offices, and again, Malta, but what I recommend to many family offices that want to be international, usually above $1 billion, you should set up a satellite family office in Switzerland. I have my reasons for that. I'm not going to discuss all of them as I keep that private for my members and my consulting projects, but it hints at what you said that many of us know: the stability of Switzerland, everyone has a gun, very stable law, and the world has their money there, which is why a lot of people won't, I was going to use a different word, but let's go with mess with Switzerland, because
Exactly
they'll
right.
confiscate your money.
There are a couple places in the world where nobody's going to mess with those, because everybody in the world needs a place where nobody messes.
Would you call that city of London in Switzerland?
Well, I'm sorry, what about London?
Are you familiar with the uniqueness of the city of London?
You mean as a financial center?
Well, not just a financial center. It somewhat is a unique destination in and of itself.
Yeah. Yes. Remember, I read law at Oxford. I'm very familiar with the city.
Yes, you were there. That's true.
Yes, and in fact my professor at Oxford is probably the top tax QC in all of England right now, Venable.
Ah.
And so I'm very familiar, yeah, with the city and the advantages there, and yeah, Isle of Man, setting up corporations and stuff. Yeah, they're safe havens in the world. There have to be. Even among enemies, there are safe havens that we're not going to mess with that.
And there's a couple of others that would get me in a lot of trouble that I'm not going to mention, but those are the obvious ones. If you want to learn more, become a consulting client of me and FOA. We'll help you. One day, Adam, it's inevitable. It always happens. One day we will have a complete dollar collapse. 5 years, 10 years, 50 years, 100 years. You want to take a guess?
Angelo, you're so funny. No, and it's not going to be aliens that are going to cause it. I don't know. And again, I did say, I don't know when there's going to be a dollar collapse, but I know that a lot of other things are going to be collapsing before it. Right?
We'll kind of see it coming. You're right.
We'll see it coming. And
well, then of course, Bitcoin's going to stand alone, Adam.
You know, the thing is, there's so many other things to focus on. You know, like if somebody said, Adam, if the super volcano in Yellowstone erupts.
Yeah, we're done.
What are you going to do, Adam? I don't know. At that point, all bets are off, right?
Right.
As a species, we're in trouble. And so you want to think about the problems that are tractable and they're, solvable. And there are a lot of, I spend my time thinking about those things than hyperinflation or a dollar collapse or super volcanoes or aliens.
Let's have a little bit more of a positive, maybe final couple of questions. We got a little dark there the last 45 minutes.
Try to lighten it up.
Yeah, let me lighten it up. In 1939, the late great investor, Sir John Templeton, brought 100 shares. I think he borrowed even the money in every company trading under $1. Now, again, 1939. Over the next few years, his investment multiplied many times, even though many of the companies he invested in went bankrupt. Now, I was going to give, is this a correlation to the early wild swings of crypto and digital, but I don't think you want to quite go down that route. But in general, is there a lesson learned there from the late, great Sir John Templeton?
Well, who was it? One of the Rothschilds that said, buy when there's blood in the streets, right? When there's war and everyone is, right, when it looks like apocalypse and Armageddon are upon us, that's the time to not bet against the human race. And so, it was Winston Churchill who said, I'm an optimist. And he said this during the depths of World War II. He said, I'm an optimist. It doesn't seem to make much sense to be anything else. Right? And so you have to, if you spend your time planning for apocalypse, if it comes, I don't think your plans are going to help too much, right? And so, because really at that point, all bets are off, right? Even those even those safe havens may discover they're not so safe, really. And because everyone's relying on them. And so it's Sir John Templeton, who was a great investor, and he was an investor the way Buffett was an investor. He was buying companies. If I can get them that cheap, I'm going to buy them, right? Good companies. I'm betting on the survival of the human race. 1939, right? The depths of the Depression, World War II just getting underway. Good time to buy.
For sure. I probably have 4 to 5 questions. We'll go a little round robin lightning.
Go for it.
Let's go for it. Will the FAANGs still be all powerful, plus Microsoft and Tesla, in 10 years? Or will blockchain, DeFi, longevity, something come along and pop into that top 7 or 8?
Well, I think DeFi is going to, the FAANG stocks, as you say, I think their big problem is legislative threats, right?
Yes.
You have Amazon, Google, right? Even Apple. In a trade war, Apple's going to get hit. So it's legislative threats are bigger threats, I think, even than technology for those companies. The DeFi is gonna impact Wall Street, and decentralized finance is going to completely disrupt banking, lending, venture capital, Wall Street, film studios, record labels. All of those are just.
I mean, trust me, Adam, I'm the biggest fan of that. But I got a follow up for you. Are those companies that are all powerful and control political actions that we're starting to see now, are they going to slow that down or even allow it to develop?
They can't. They can't. And I'm gonna go back in time a little before 1939 to one of my favorite anecdotes. I think it was 1936. DuPont's genius chemist, a guy named Carruthers, runs into the CEO's office. It was Lamont DuPont II, and Junior. He wasn't the second yet, but Junior. And he said, I just discovered this new synthetic with some super long name, and the synthetic was renamed nylon. Okay, now it was a game changer, right? And especially this happened right before the war when silk and Japan was cutting, obviously they cut off our supply of silk. So nylon was crucial to the parachutes and other materials. Anyway, the genius thing that Lamont DuPont Jr. did was he set up a skunk works division to put nylon out of business because he knew all of his competitors were going to be trying to do that. So he wanted to own the next gen. That was his initiative. He said, oh, nylon is great. We're going to make a fortune on it. So I'm going to set up a division to try to put it out of business because I know my competitors will. And if we succeed, I'll own the next gen too. And so these FAANG companies, you can't stop the DeFi. It's happening. You can't stop that tsunami, but you can own it. You can acquire it. I'll tell you, a lot of the young people who I mentioned, most of them are under 30. In fact, most of them are under 20, 25, 26.
Yes.
They're not interested in buyouts. There's a real ethical backbone to what they're doing, in a way that the original crypto guys had, and then it became kind of speculative fun. But there's a real ethos behind the DeFi community. And by decentralized finance, it's really, if you're listening to this podcast, Angelo and I throw out this word DeFi or decentralized finance, you really want to be familiarizing yourself with it. It's going to change the world in the next few years.
Yes, and we have a fair number of videos up on YouTube, and I hate to again go infomercial-like, and my members don't take me up on this as much as they should. but we're fluid on it. I have a lot of resources. I'm very connected in it. And we also do in my consulting arm some work on that and some special opportunities for our members as well. Back to the FAANGs +2. Which one will lose its complete dominant market share first? They won't go away, just like IBM didn't go away. But if I look 5 years out, maybe I'll give you 7 years. Most of the people I have on say Netflix, which leads me to believe.
Oh, Netflix is history.
Wrong.
Netflix is going to be acquired, so what's happening now is there's a bidding war going on. The tech companies are bidding up media assets.
Yes.
Right. The same day that AT&T spun off Discovery, the same day the Discovery Channel, Amazon announced that it had acquired MGM. So all the tech companies are interested in media plays. So watch what's going to happen. They're going to bid up the price of media properties, right? The tech companies, awash in cash. Look at Apple, Amazon, and there's no way Netflix can compete with that, right?
I agree.
Right, there's just no way. And so, and Netflix has got, it's pincered in two ways. It's pincered. Not only do media properties become more expensive, but then their original production, right? The Netflix produced movies are twice as expensive. There used to be one game in town in Hollywood in terms of animation, and that was Disney. And then I think it was like 92, DreamWorks was formed, right? With Katzenberg and Geffen and Spielberg. And overnight, the cost of animation doubled. So to make an animated movie, once DreamWorks came along, it doubled for everybody. So Netflix is going to find the cost of producing movies go up a lot. At the same time, young people aren't watching as many movies. Why? Because they're playing in the multiverse.
Yes, they are. A completely out of left field question. Is Bill Hwang, the founder of the family office Archegos that got in trouble for the swaps? So I've argued he did nothing wrong, but I know he's bringing legislation down on family offices. I get it. But let's take this apart a little bit. The guy came from nothing, worked for Julian, did very well as a hedge fund manager, amassed about 2 or 250,000, whatever it was, a personal net worth. And then in 2013, so 7 years or 8 years since, he made his 200 million as much as 30 billion. That's 150x return on a big block of money. Is this guy the modern Jesse Livermore? And is he arguably in a short window the greatest trader that we ever seen?
For me, the greatest trader ever was trader.
Yes.
In that sense was Richard Dennis. Before your time, Richard Dennis was a commodity trader. And in the 70s, he was delivering pizza. He was a University of Chicago philosophy student. With pizza delivery money, he made 300 million.
Oh my God.
Yeah.
Wow.
Yeah.
What
300 million.
60s?
No, 70s. During the inflation, hyperinflation. And, when wheat was going through the roof and gold and all those. And so that wasn't hyperinflation, but it was massive inflation. And anyway, anyone who can go from 250 to that kind of money, billions, is making, you mentioned before, crazy bets. That's crazy, right? And again, if you're placing those kind of bets, it reminds me a little bit about the leverage that long-term capital management, right? Their leverage was 100, 200 to 1.
Wow.
Like, oh yeah, a little drop, you lost all your money. It doesn't take much. And so anyone who can go from 250 to 30 billion in 7 years can lose it overnight. Oh, no problem. Because you're making crazy bets. And it works as long as it works, and then it doesn't, and you lost everything.
Now, he wasn't doing anything wrong as far as we know under the current system with swaps. And by the way, the banks that are now claiming innocence here, supposedly he was over $100 million in fees year after year to the banks. They profited from them. They loved them until they didn't.
Wait, Angelo, just think about the logic of it. Is anybody in the world, including Buffett, and he's ne plus ultra, he's Zeus, as far as I'm concerned. Okay, even Buffett isn't smart enough to take 250 and turn it into 30 billion in 7 years. Like, where's the value? Where's the anomaly? What did he spot that no one else spotted? No, he had to have been running massive risks. It's the only way you can get those kind of returns. Just look at the logic of it. Now, I'm not saying he was doing anything wrong, but he was placing clearly outrageously risky bets. It's the only way you go from 250 to 30 billion.
My final question, then I did promise an audience participant, I'll get to two of their questions, then we'll wrap up, Adam. Sure. And again, a little bit of a different type question.
Go for it.
Should a single family office, and I'm asked this question, a multi-billion-dollar family, let's say US centric, but I'm going to argue they should be looking globally. Should they build an internal world-class team, in my opinion, potentially domestically and internationally, possibly Singapore if they're looking for more Asian investments, but we could save that? Or should they basically practically, maybe not literally, practically outsource everything to best in class? They may get a little better talent, but they don't have the same control.
Angelo, I'm surprised to hear you ask the question because you know the answer, which is why you formed the Family Office Association. I'm not going to plug you, but I am going to plug you that you don't do it yourself. You combine forces with other family offices. Why would you do it yourself? Really, to create that kind of team internally? You get a group of families together, right? The multifamily offices, that's the way to go if you really want to build that kind of a team. Yeah.
Yeah, and with the new guidelines, indirectly, thanks to Bill Hwang coming along, families likely above 750 million are going to have registration and some sort of oversight by the SEC, which I hate.
Oh man, I'm so pissed.
Yeah, I know. It's part of the course of the problem.
Life.
Oh well.
I'll find a way to live.
Yeah, with more government oversight, which, okay, another time. Here are two questions from the audience. Let me blow them out. Which rare earth metals does Adam like, and how would Adam buy them? ETF, mining companies, etc.
So I have to confess an ignorance of the rare earth metal issue. There's an there's an ETF, I think, for rare earths. I forget what it is.
Yes.
Right. I forget. It may even be like rare, RARE. I'm not sure, but look it up. There is a rare earth ETF. And again, I will say that if they start to take off, it'll be a strategic play. It'll be one of those supply side issues, and they'll really go up. Right. So that's the kind of thing that if I were going to go into rare earths, I'd probably do it via an ETF. Oh, I don't know how you'd have to, it's a safer bet than trying to pick 2 or 3 companies that might or might not, mines that might or might not, be winners in such a world. Yeah, I would think, again, we were talking about seeing signs early. If there's supply side shocks, it'll hit the rare earth metals big time, because we don't have as much as we need here in the States.
No. And by the way, it looks like that ETF is REMX. Check it out.
There you go. Rare earth metal. Right.
Right.
Yeah.
Another question, it's a little specific, but I'll throw it out there. what are your 1 or 2 favorite stocks to buy today and hold for at least 6 months?
But I don't, again, I think always in terms of long short. In other words, not buying one thing, it'd be buy, and I don't analyze. I do global macro, and when I do sectors, I might do banking stocks as a class, but I don't do fundamental analysis. So I'm not gonna go, is Morgan Stanley better than Citibank? You know, I'm not gonna get into a million analysts around the world asking that question. So I can't name 2 stocks because I don't trade like that. But there are a lot of long short plays, right? Again, the basic play is long the US, short the rest of the world right now. And has been for 14 years.
Excellent. Yeah. Adam, the 2.5 hours went by so quickly, as it always does. I look forward to connecting later in the year into early next year, and somehow I'm going to have to come up with 40 to 50 new questions. Maybe sure I can rebundle some of them.
I'm sure you will. And
and Adam, for those that would like to follow you, you're very active on Twitter and some of your other platforms, or learn more about Robinson Global Strategies. How could they do so?
Yeah, I am Adam Robinson is my Twitter handle. And you can always shoot me a direct message there, or Adam at Robinson Global Strategies. I'm not really taking on new clients anymore, but I'm happy to steer people in the right direction.
No, that's very helpful. This was amazing. There's probably 10 questions I left on the table, but I'll pull them out in 6 more months.
Probably aliens is my answer to every one of them.
Yeah, when I go back and listen to the interview, that's definitely going to be some of the highlights that we're going to take away. Did aliens create Bitcoin? Forget the US government. It might have been aliens.
Definitely aliens behind it.
Everyone, I'm Angelo Robles, host of the Angelo Robles podcast, the founder and CEO, as you now know too much about, at Family Office Association and Family Office Association Consulting. You can learn about us on our website, familyofficeassociation.com. And I'm also very active and sometimes even creative on social media, ironically in my Instagram. So check us out. For now, I may change it, but simply it's the company name at Family Office Association. And definitely YouTube is my most active platform. Many of you follow. I greatly appreciate it. But if you're listening as a guest, it's free. It's easy. Go to Family Office. You'll find it. And look it up on YouTube. On that note, it's been a great pleasure. Adam, thank you so much. Have a great rest of the summer. Look forward to keeping in touch shortly.